What's going on, traders? Hope everybody's having a great weekend. Thank you for joining me on the weekly recap. Really do appreciate it. I'm going to go through a couple of key levels that we are looking at into next week, what to potentially expect. And of course, we have a new month ahead of us, so we'll be starting off with the monthly chart here and take a look at where we are from that point of view. Of course, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, well, before we get into the charts, let's look over at the economic calendar for this upcoming week and see if there are any major data points that we do want to pay attention to. We also do have some earnings coming up this week. The major names really are behind us now, so but we do have a few other notable names that maybe we want to just keep an eye on. So we will go over those as well. But as I said before, let's kick it off here with the economic data coming up for this week of February 5th. So let's get into that here. And what we're going to be looking at here on Monday, we have at 9:45 we have the final U.S. Services PMI. We do have Goolsby speaking on television apparently at 10 o'clock. ISM manufacturing at 10 o'clock as well. And then we have Bostic making some welcoming remarks. It does not say to where, but that comes in at 2 o'clock. So maybe they are having some type of a Fed speaker event this week. And it looks like that is true because we have a bit of a Fed speaker gauntlet on Tuesday, February 6th. Looks like Messer speaks at 12 o'clock, and then we have Kashkari at 1, and then the next hour we have Collins, and then at 7 o'clock when the market is closed, we do have Philadelphia Fed President Harker speaking. So quite a few speakers there on Tuesday. Wednesday, we have more speakers coming in at 11 o'clock. Let's see, Krugler, and then we have at 11:30 Collins, Barkin at 12:30, and Bowman at 2 o'clock. Consumer credit also comes out at 3 o'clock as well. We'll keep an eye on that. Thursday, we have initial jobless claims at 8:30, wholesale inventories at 10 o'clock, and then we have Fed Barkin speaking again at around 12 o'clock lunchtime. Friday looks pretty quiet, nothing too interesting there. Do have Dallas Fed President Logan speaking at 1:30 though, so we'll pay attention to that. All right, so we've got that out of the way. A relatively quiet data week, but tons of Fed speakers for potential shakeups. All right, so just going over some quick earnings that we'll keep an eye on. We have McDonald's and Caterpillar on Monday before the market open. Eli Lilly been very strong in the healthcare section, opening up our Tuesday earnings before the market. Spotify as well in pre-market. BP. And then after the close on a Tuesday, we do have Snapchat and Phase 4, Chipotle. And that's about it. On Wednesday, before the market opens, Roblox, CVS, Uber, and then after the market closes, PayPal, probably keep an eye on that. Disney as well after the close, so we'll keep an eye on that. And then a Thursday before the market open, I don't really see anything that looks too interesting. Maybe Spirit Airlines, since they had some interesting news causing some big moves in that airline. So maybe we pay attention to how that reacts. But not really a market mover by any stretch of the imagination. Pinterest and Affirm on a Thursday after the close. And then Friday, we just before the market opens, Pepsi gonna be releasing as well. So I will post that chart up on my Twitter. All right, so let's get into some charts here. Now we've got the monthly time frame up, and what can we take away? Well, we are still closing here over the pre-market, over the previous highs. So everything is looking strong from that perspective. Full-bodied green candle here, closing out the month. And now what's happened really in the trend sequence, right? We had this low, and we talked about this when we were selling off, back in October. when we were looking at this monthly time frame, what were we talking about? Remember, we were talking about that inverted head and shoulders coming back to retest the top of that neckline, and that was going to be putting in our next higher low in the trend sequence right here. And of course, remember, we had that neckline right here for the retest in this area, which lined up nicely with our point of control. So now we've put in that we had our swing low, higher low. Now in the monthly trend sequence, we have made our higher high, right? So everything is well and good here. From the monthly perspective, though, certainly we could potentially look at a higher low coming in the market, but this is of course on the monthly time frame. So intraday, obviously nothing really, and even on a week time frame, weekly or daily, we've got nothing to worry about. But it's just something that we want to be cognizant of now that we've had 1, 2, 3, 4 green candles in a row from the monthly perspective. Could we afford a little pullback on that? Certainly could. I don't know if February is going to be it, but we will be aware of that. And again, those are all healthy and welcomed, just setting us up for that bigger move, right? Now, what else could we potentially be looking at here as far as where this move out of maybe that cup and handle or even that giant bull flag, right, that we had here? And we're also looking at, let me get this other tool out, this type of move here. We broke over the neckline. Well, if we keep on moving, and we can still again afford a pullback, but we could even see, from the rest of this move, the final move, probably, now of course we're going to be targeting that 500. Now we hit that 495 target we talked about in last week's video, and we what was the high here? 496.05. But we did close a little bit with a pullback at the end of the day on Friday. Nothing really too major though. But I do think that we're probably going to go ahead and be magnetized towards that whole number, hit that 500. But where could we head to after that? Well, if this flag continues to, or is true, and which it certainly has broken out, I really think we could see the market up somewhere near that 520, maybe 515 area. Could be the next long-term target that we approach to slowly, and that doesn't go without saying that, again, we can make some pullbacks along the way, but all things being equal, as long as we stay over the previous all-time highs, there's really no reason why we cannot get there. All right, so let's go in here to a weekly perspective and see what we can take away from that vantage point. All right, here we are on the weekly chart, and let's pull this back here. Okay, so now we were talking about that potential pullback, and we can see a 50% retracement. I think that or a 25% retracement within this weekly range, right? And there's plenty of areas here where we can afford. We'll be watching to see if we start to pull back, and start, coming down into the 492, and we're going to see this a little bit clearer on the daily chart. And I guess maybe the most important thing, or the important thing here from a weekly time frame perspective, actually really to go over, would be the fact that if we did make a weekly lower high, where would that be? Well, it would be coming back to retest those previous all-time highs and the top of this previous balance breakout area here. Now I put these numbers on my chart. Let me take that off really quickly just so I can accentuate clearly the balance pattern here that we had broken out of, and it's going to be the highs right here from this breakout, right? So if we did get some type of a weekly, let me actually make that a little bit, a weekly higher low, that would bring us down into, and we were talking about this last week as a potential spot that we could come into, and it still stands, because nothing really has changed other than that we've just gone higher, but we still want to be aware of these weekly structures, right? We could pull back here into the 477 area, 478. We can even call it 480. The market's been so strong. Anywhere maybe in that area, we can afford a weekly higher low. As I mentioned before, I pull in here and we come up to that 500, 510, and so on. So that is welcomed and totally possible. Now, there are a couple of things that were very interesting in the market that we will go over from a breadth perspective. Without a doubt, the market was driven by a handful of stocks on the last few sessions. Of course, Meta with the blockbuster earnings announcing that dividend, which will only provide more buyers to come in to that name, as now it is really going to be classified, as a quote unquote blue chip stock. And so let's take a look now at the daily chart, see what we can take away from that viewpoint, because that will give us a little bit more of a potential intraday thought of what we're going to be looking at, where we can afford to now potentially put in a daily higher low, again, just to give us that springboard to come up higher, right? So the first thing that we're going to be looking at, the first is about that 50% retracement, and it's not going to be about even here. What I'm really going to be watching is the high of these, what is this, the 29th and the 30th, right? So the top of that breakout is going to be what I'm going to be paying attention to. Now we had, of course, this pullback day on the 31st, and what did that really do overall, though, from the daily trend perspective, right? That really gave us our daily higher low, right? So, we had come up here and we made our higher high here. Oh, that's not the right tool. We had made our higher high here, and then we had come in here and made our daily higher low, right? And we had our lows here. Right, so, and now we've come in and made that higher high on the daily. So the first area, again, that we're going to be watching, that the bulls are going to need to contend with, and our first daily potential higher low that they could put in, it's going to be right around this 491.65. We're never gonna get it to the penny, but anywhere in this area, if you want to do the wick or you want to come in and do the body, pick your poison. But that's the first area that I will be watching, that the bulls are going to need to contend to, and I would be perfectly happy and fine with a pullback into this area, giving us the next daily higher low, and then again springboard here. But what else am I going to be watching? Well, it's going to be the top of this breakout, right? We had these two candles here. Let me pull this out. Kind of a double inside bar. Where is it? Right here. Now it's not totally clean, but there we go. Okay. Now we had that double inside bar breakout right there, and it lined up perfectly, right, with the highs here from the 24th, 25th, and 26th, right? So we're also going to be watching that area very closely, and we can bring that in to about 489 or so. Another area where we could potentially pull back into, again, that would be setting us up for another daily higher low. Either one of those would be acceptable, in my opinion, for the move up higher. But if the bulls start to lose this area, I would not think it would be wild to think that we would be able to tear through some of this structure and maybe come down and to retest the these lows right here, the highs right here, excuse me, I should say, right around 485 thereabouts. And if we start getting under that, well, then I will be looking at right around this 482 area. Once we get under this 482, that's going to be really the line in the sand. If we get under that 482.75, we could call it, we could come all the way down and then retest the top of this previous balance range, and this would give us the weekly lower higher low that we've been looking for when we were looking at the other charts, and that would pull us up into here like this. So we've got a couple of different options, daily higher low here, the daily higher low here. So we've got a couple of different options. Of course, the trend overall is up, has been up. So we want to, trade with that order flow. So, but these just give us some kind of, framework of where potentially we can afford either that daily or a weekly higher low. So we'll be watching those levels very quickly. Again, nothing really to get too concerned about from a weekly perspective, unless we started really breaking under here. So breaking under the top of this previous balance around that 478 thereabouts. So there you have it. That's what I will be looking at. Let's kind of get into the hourly chart really quickly. Oh, and I don't have. Okay. Do this. Okay, so you can see now here a little bit more granular of what we're really going to be looking at. You can see these previous highs that are going to need to be defended here, as well as basically those Friday lows right here as we just push back up a lot stronger. This is obviously the highs that we broke out of from the Fed. This was on FOMC day, where we sold off down to the lows from back in Tuesday and Wednesday. We retraced all the way back up. So this, if you want to say, this was that major break of structure right here that really pushed us up higher, right? Anyone that was short, sorry, this thing froze. There we go. Anyone that was short under here, all got squeezed out underwater. We came back, retested that liquidity, boom, and then we came back up, and that's where we found that bid. Everyone was quick to cover who was underwater in this general area right here, and they were quick to get out of the position, driving the market higher. Now, of course, Meta, Amazon, and even Apple, although it did not react too kindly to earnings, got bought back quickly on Friday's session. And there were some other warning signs, which I was alluding to, which we will get into in a moment, as the distribution of that rally really was not reflected. Was only really concentrated in a couple of names, and really was not reflected in the rest of the market. And we can see that when we go over our breadth readings and some of our other market internals. But either way, as long as we can still hold over these previous highs here from Tuesday, all are well and good. If we pull back into the 489 area, I still would take a shot probably at that long. But if we break under, then really our main level that we want to watch is for those potential longs down here. We do still have, from this rally, pretty thin structure that would not be too hard to retrace when we make these candles. So if we start to find a see some selling pressure under this level, it really would not be too hard for me to picture us coming all the way back down into that Friday open, and just tear through this hourly structure, or this week hourly move. And this was all fueled by the Meta, basically Meta and Amazon earnings, right? So, all right, let's get into a couple of our other internals, because I did want to go over that as well, from what we saw. Now, looking at the sectors, obviously on Friday, everything in XLC driven by Meta, and the semis were also strong, with NVIDIA making impressive moves as well. In the market, I think it was up about 5%. But where are some of those warning signs I'm talking about? Well, look at the market breadth on Friday here. The S&P down negative. The Dow is down almost 3 to 1. Tech not so bad, 1.3 to 1. But IWM was getting affected by TNX, and we will go over that as well, because we are seeing some interesting moves there. That was down about 2 to 1, and IC almost 2 to 1 as well. And look at the ADD, all from this rally on Friday. Look at this push up higher to new all-time highs, but look at the ADD. We didn't not even get over zero here all day. So weak breadth, advancing decliners weak. The sectors were kind of mixed, a little bit stronger. I mean, we did have some positive ones, here, but really propped up here by the XLC and some of the tech and and the semis. So, with the dollar and TNX also giving us these kind of breakout moves as we've been watching, it begs to question here, who is the one that, is what's true? What is real? Is this rally real? Or are the breaths signifying, oh, hey, let's be a little bit extra cautious as we continue to make new highs. Now, again, this doesn't mean that I think we're, going all the way and crashing down or anything like that. We've got our weekly levels. We have our triggers here that we want to be paying attention to. And so we'll play, according to what the chart says. There's no reason to be overly bearish. We are in buy the dip mode until further notice. But either way, these kind of readings are not what you want to see for a market that is making all-time highs, right? So we just want to have that in our back pocket as we try to navigate these interesting markets overall. The other thing that we were watching and that we will continue to watch, and we'll just jump back really quickly to the monthly chart, is these still overbought conditions. We can still get up there. You can see back here on these readings how long we've stayed up in this area before. Potentially we even turned red before we even saw any type of pullback, but we are back up there on the monthly time frames, as we noted in our last video as well. Same thing here on the weekly, so we will pay attention to that. The daily did cool off just a little bit, but still hanging out here. Not really overbought yet, but it did pull back a little bit, so we will be mindful as of that as well. All right, so let's get into some of the other charts that we like to look at here, and we were talking about the dollar and TNX. So let's get into that right now, because the dollar is coming into a very interesting spot overall. Now, we've been tracking this since back in the start of the year, watching this consolidation. We were watching this flag breakout as the downtrend started to shift. The tone in the dollar has started to change once we broke over that flag. We kind of consolidated here for a while, but now you can see here we pushed up. Is this a convincing close for me? Over, do I have another drawing set? No. Is this a convincing close? Let's make it a little bit cleaner so we can see it here. Is this really a convincing close for me over these highs? Not really, but we did close over that 103.80 area, which was his previous highs. Let's see if it can hold over that. I think it could even pull into 103.50. 103.65. As long as it holds over there, I mean, I could still consider this, a breakout of this kind of consolidation zone here. We did close obviously here above it. So let's see what happens. Do we kind of come in and make a high and tight kind of pattern here, and that gives us that next push up higher? It is safe to say here, let me fix this a little bit. And we talked about this in last week's video, this level as well. We're over that. We need to start, if you're bullish on the dollar, need to really see those daily closes over the 104. That would be the best, but like I said, it can pull back a little bit into these wicks. I'll start to feel a little bit better about where the dollar is positioned from, if you want to be bullish, totally bullish. I mean, I am bullish on the equities, but I'm being cautious, with these interesting developments. I mean, we would want this back under 103.50. If we start trading back into the middle of this range, and certainly under a 50% retracement of Friday's move, okay, then we can start being a little bit more what's the word I'm looking for? Optimistic about how much I believe in this particular rally. And again, like I said, we can make a daily lower high, we can make a weekly lower high. That's all well and fine, but we just want to be aware of that, because we don't want to get caught in a poor position long at the wrong time, then to get stopped out on, and then only to see that we just made a weekly or daily lower high, where we could get a much more advantageous risk to reward entry, right? So, but either way, the dollar hanging out here. Let's see if it makes this high and tight. Really, it's got to get over. If you're bullish on the dollar, we've got to see the continuation move over 104.25 to me. Breaking over that, okay, then we can look for those other targets that we were looking for. And I said that in our last video, we would be looking for maybe the 104.50 here. And then if we do in fact get over that, you can see it would be recapturing the highs, right, of this previous structure here. So recapturing the highs of this previous structure here, and that can give us the move, right? Maybe we don't get all the way to 105.10. Maybe we only come into 104.85, maybe 105, but that would be kind of my next target area if we do actually start to see some acceptance over the 420, the 104.25, 104.50, and then the dollar bulls can target up in this area here, right? Potentially anywhere into this area right over here, right? So I don't know if we'll make it all the way to 105. Again, maybe we just get stuffed right at those lows, 104.88, so thereabouts. So we'll be paying attention to that. Now, of course, we talk about the dollar being up. That usually puts pressure on the equities markets, but what did we see on Friday? Look at this huge move, obviously here on the dollar, and the markets just did not seem to care. So again, with the market breadth and the strength in the dollar and the TNX, which is not in a complete warning zone yet, but we did see a very aggressive move in the 10-year. Who's telling the truth here? Because somebody's lying. We don't know who it is, but it's very, very interesting what we're seeing. Let me just take a peek here. Let me let me go back here, and I just want to take a look. What does the weekly chart look like here on the dollar? And then we can just take off some of these levels so we can look at it just from a price action perspective. Okay, so now from that weekly look, we have closed now over the weekly 20 and the weekly 9. And this candle here looking pretty bullish, right? We've had it tried to get pushed lower, could not be pushed lower, and the bulls came in and filling us up here, making a new higher high. We will see if it continues, but this overall structurally, definitely from this perspective, looking a lot better. We can even potentially start to make a case. Again, we're talking about this area. Let me, where's my tool? Okay, do we have some type of a case for, boom, right there, some type of a case for a weekly head and shoulders starting to, inverted head and shoulders starting to set up here, really again with that type of pattern, invalid unless we break up over the neckline, and then come back, retest, and push up. And if that happens, it's very possible that the next target for that would be maybe the 106, the top of this previous, whoops, that's not the right tool I wanted to use, this previous structure right here. And then over that, well, we probably would be coming into these equal highs, somewhere in this area around the 107.25 zone. So that is an interesting look as well. Let me just take a quick gander here at the monthly, and look at this, still holding the 20, just barely, unconvincing, non-committal close in my opinion over the monthly 9, but interesting overall though, in a range, bigger picture here. So and what's the top of this kind of range here? Maybe that 106. So if we start getting over that, then we'll look in those equal highs, and that's going to put us up towards that area here. But either way, that's what we'll have to see. All right, let's get into the TNX now here, the 10-year, because again, this is not really not as concerning to me as the dollar has been, but making an interesting move nevertheless. Monthly view. Let me get this a little bit cleaner. We can just take a look. Monthly view, still not over the 9 though. But a strong candle, right? Trying to push down here, pushed up pretty aggressively for its first green month in quite a while. You can see on Friday it was up almost 4.5%. So a real big move in the 10-year with equities just ripping up higher. So that is very interesting. Weekly, though, did close a little bit red. Still, same bullish, candle here, closing in the fact that unable to accept lower on the week and really pushed up higher. But still, we're right at that 4105 area. This is something we have been watching. These previous highs here, here. The low here from January 4th. That's really where, for me, I start to get a little bit more worried about what the 10-year is doing. And this, of course, has been a headwind for the IWM, for the Russell, really to get moving. So let's get over here and let's look at the daily chart. Now, again, we were over this warning sign for a while, right? We came up, almost hit that 42. And that's when we started to roll over. We made a rolling top, came back down. Now we're just hanging out. We didn't close over the 20, and then uncommittal, we closed right at the 9 again. But here, we're still not over that area. We just talked about the 4105. That's, again, where I'll be watching to see if we can get over that. Just a very aggressive move with the markets up. So with the markets making all-time highs, quite the interesting divergence with TNX and the dollar up. The chart is not pretty here on the daily, but we will just continue to watch to see if we pull back. I mean, from here we could pull back. We are over 40. If we could, we really could even come down to 39.75, and we could consider that still a potential bullish consolidation if we come up like this. Come in and then we make that move up into this area here. We'll see if that ends up rejecting, but if we do start to hang out and accept price over this area, or even in this area, something like this, okay, then we'll start to be singing a different song and dance, because then we would probably be looking for moves back up into these equal highs, and we'll see what kind of effect that puts on the market. But again, this is kind of my warning zone, and back over 42. Okay, well then I'm getting a little bit more concerned. So let's pay attention to this very interesting move that we saw on TNX and the dollar. Yeah. All right, let's keep it moving along here and get into some of our other market internals, and then we will start to take a look at a couple of other things for next week. Kind of been over our main levels that we will be paying attention to, but oops. Okay. All right, let's get into. All right, let's look into the VIX, what's going on there, the call-put ratio as well. Call-put ratio, nothing really too extreme. VIX hanging out, though, and what's interesting to me, the market made all new all-time highs. What did the VIX? The VIX was only down, basically flat, right? Down not even 0.25%, just hanging out. Tried to get crushed a little bit, but still pretty resilient here. And again, until we're over 15, until we're over 15.75, again, no cause for worries to me. But what's going on here? Let's look at it from a trend sequence perspective. We've got our lows, right, that we put in mid December, and then what do we do, right? From here, what is this? This is a higher low, right? Whoops, I don't like the way that's crooked. Higher low, and this was, what was this, around 12.35 or so. The next one, 12.43, higher. What's this next one? About equal, but maybe a little bit higher, 51. Okay, so look at this. It is creeping higher here every time. All right, if not making an equal. So this is interesting. Okay, another reason maybe to say, all right, let's just be extra careful up here in the markets, because volatility, you would think with the market making new all-time highs that this would have been maybe down closer to 13, maybe even 1350. Didn't even get close. Okay, so interesting developments there, and the VIX just slightly creeping up, and right, we can do a little bit of a channel there if you want to do so. All right, so let's keep it moving along. Right along here, let's look at a new highs versus new lows. Again, still above the zero line, but relatively flat overall. Again, this I think really speaks to the lack of overall participation in these new highs. You would think that this would be upticking a little bit more aggressively, slight uptick, but really not too much to write home about. Again, though, you do not need major readings in this. As long as we're above zero, we're all good and fine, from that view. But it's still interesting to note that this really did not have any type of aggressive move to the upside, right? And if we come in and look at the 50 SPX 50 R, and this is going over and tracking the amount of stocks that are trading over their 50-period simple moving average. What did we have on Friday? Well, the market made all-time highs, and the amount of stocks trading over their 50-period moving average actually went down. Okay, so another potential warning sign, caveat, little canary in the coal mine that you just want to keep in your back pocket as we continue to march up higher. But again, we've got our levels. I'm not talking about any type of crash, but hey, daily higher low, weekly higher low, potentially setting up to be put in overall in the market. Well, maybe there are a few signs that's suggesting that could happen. And again, I'm not talking about tomorrow, and I'm not talking about even mid next week. It could be something that comes in and happens within 2 weeks from now, something like that, or maybe even into the start of the end of February, into the start of March. So let's keep it moving along. Okay, another interesting caveat, data point here for us to pay attention to. All right, something else I wanted to point out here that was kind of going in interesting. Now we had the bonds. Okay. Now we did have a little bit of a pullback, on the market at the end of the day on Friday. Oh, that's not what the one I wanted to look at. Boom, there we go. Have our daily. Another interesting divergence here. What's going on in the bond market, right? Look, we've made all-time highs now, and what's going on here? Well, this is continuing to head lower. Okay, so interesting divergence here. What is the bond market telling us with this move lower? You don't want to really necessarily see this divergence going on here. And so we will note this. The bond market sometimes can be leading and giving us clues to potential movements in the regular market. You would not really want to see this heading down, this heading lower, with this heading up all-time high. That just does not make sense. So another data point that we will pay attention to over the next few weeks. The Dow and the transports have been a major divergence that we've been talking about for quite a while. Transports were up though 1% on Friday, which was nice, but we still have not been able to break back up over these previous highs. Kind of just trading in a range here between the 31st and today's high. So back and forth here, but Dow making a new high. Still the divergence here in the transports as it has been for quite a while. So we're going to, of course, keep that in our back pocket. All right, I don't think that there is anything else. So let's look at the VIX internals here. I don't think that there was really anything. Nope, still compressed, not really compressed, not really pushed down much on the VVIX. The VIX futures, though, just ticking up ever so slightly. But 9 versus monthly VIX still under the zero line. So no real concern there whatsoever. All right, let's just move right along here. I think that that's it for the data points on the market overall. Let's come into SPY, take a look at some of our intraday numbers. We've already kind of went over them here. These are really the key numbers that we'll be paying attention to, at least I will be paying attention to, as potential buy zones. Again, I probably would be hitting 490, 491 calls maybe intraday if we did come back down into retest these prior highs, and I would probably take a stab right here on a retest of this neckline. I would be a little bit more cautious here as it's been tested before on Friday, but another zone that I will be watching. But really, as long as we still hold over Friday's highs, right, in this opening, this was from NFP that came out on Friday, but from that intraday perspective, still, as long as we hold over right here, right, these highs and Thursday's highs, and which have nice confluence right now with this hourly 20. As long as we hold over that, really no reason to be so cautious. Ideally for me, what I would rather see, or what I'd hope to open to see, is that Globex sells off a little bit and gives us a better risk reward. I'd love to see the market open up right down here for a potential long trade at the open. Even better down here, I would definitely be trying that. Not exactly at the open. I'd probably wait for, I like to wait for the market to kind of settle. I don't ever really trade that opening drive, but if we do open down here, it might be worth a shot. For me on options at least, I like the IV to settle, but on futures it might be something that I would consider. But it's not something I normally like to do. But either way, any pullbacks into these areas, I would still be a buyer. I'd be, if I am long here and we break under, I am going to be out quickly, because again, we talked about the thin structure that was created here on this move from earnings. We also have thin structure that was created here, and I mean, from the hourly perspective, look at this 1 2 3 here. I mean, this too again is kind of thin structure, so if we do start to see any selling, it wouldn't surprise me to see it come quickly and just eat through that, and it would not be difficult for the sellers to potentially do that if they got a little bit of momentum. And we'll see what happens with those big names that are really propping up the market with Meta and Nvidia, Amazon. If they start to sell, the rest of the market is kind of weak to be there to support the rest. The rest of the market. Is really those names kind of holding up everything. So, if they start to give way a little bit, there's no backup reserves there to really come in and save us. So we'll see though what happens with that. All right. Is there anything else here I want to point out? Let's just look. And actually, what we can do, why don't we just take a look at that structure that I was talking about. Here we go. Here, and we'll just look at it from the 4-hour view. Then we'll go down to the hourly. So you can see this gap right here. Right? High volume, nothing here. High volume, okay, this would be a little bit better, where that could potentially be supported. But this area here, and you can obviously see it too, the moves that we have seen when there is that full structure. I mean, all the way down, all the way back up, all the way back up higher. So it's a very whippy market. So we've seen when those sells actually do come in, that it's been quite hard for them to find a bid. But those, stronger sell days, admittedly, have been few and far, fewer far between. Obviously this was FOMC, but we did get one last week here, and then this week here, where we opened, sold down, and then kind of closed out flat. But then here they were the buyers once again, throwing everything up stronger. So you definitely have to be careful, with that short trade. But but not fight it. I think that if it presents itself overall. So yeah, I think here you can see on the hourly, wanted to break that down as well. Very thin, 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 thin. Pocket here. Definitely still a pocket here. So, you know, it's not, the structure here is very, very kind of, it's like, it's the Swiss cheese kind of, right? There's a lot of holes there that could potentially be worked out. And you can see here that sell right at the end of the day that we caught. No one really wanting to hold into the weekend as we've just made new all-time highs. Of course, we do have, I think the U.S. retaliated on Iran for one of the attacks. So we do also kind of want to keep that geopolitical news in our backdrop as well if we do get any more updates about what's going on there in the Middle East. So yeah. All right, I think that's pretty much everything I wanted to go over. Let's see how the week goes. It was an interesting last couple of days and very interesting developments overall with the dollar, the TNX, the market internals, and with Powell saying on last FOMC that they may continue to hold the rates higher for longer before making any decisions. So it's very possible that we don't see any decreases in rates in March as originally they were thinking. Maybe they're going to push it back now one more cycle into May. So we will watch for that, and I think it'll be interesting to see what the rest of the Fed speakers come out with in any of their headlines and how they feel about the state of the economy and the NFP numbers that came out and all of that. So I will definitely be paying attention to the headlines that are posted from the Fed speakers all this week. Alright guys, well that is everything that I pretty much wanted to go over. I hope you enjoyed the video. I really appreciate you taking the time to spend with me navigating these crazy markets. Remember, a prepared trader is a profitable trader, so make sure you plan your trade and trade your plan. Again, thank you so much for joining. If this is your first time and you've enjoyed the video, feel free to subscribe to the channel. Would really appreciate that. Smash that thumbs up button. It helps out the channel get pushed out to more users with the algorithm. And I do have my link tree posted in the description below. Help support the channel and support those companies and support me if you're inclined to do so. Alright guys, well I hope you have a great rest of your weekend. Take care, and I will see everybody on Monday.